Seth Freeman joins in now. Seth, morning. Back home, of course, in India, we saw pretty strong pullback coming in the last hour of trade. The bulls seem to be back in control with levels of 8,000 being regained. How are you viewing India right now? Are you taking a little more comfort at this point of time?
Well, I think you know my view. My view is long term, and we're going to I think we're going to see, frankly, this level of volatility, but unfortunately with a downward trend over the next 6 weeks, I would say. So, perhaps what we're going to be looking at is Indian companies that have strong U.S. dollar receivables should be the outperformers.
Seth, I just want to get some sense from you. I don't know whether you track crude quite closely, but expectation is that inventory could hit an equilibrium when we see data this week. What does that mean for crude prices, even though it does still trade at its recent highs?
Yeah, pricing for crude moves very quickly based on these various assessments. And really the question is whether the producers who've recently agreed to the treaty are actually going to keep to it, and they're going to provide accurate reporting. So I expect crude to continue rising slowly, but, these other economies need the revenue, irrespective of whether that means, and they're also very nervous about losing volume. And so there's competitive forces that I think are likely to break the treaty during the early part of 2017.
Seth, also as we get into 2017, how are you placing your bets? So how's it going to be versus U.S. markets versus emerging markets? And in the emerging markets pack, how are you placing your bets on India?
Part of a big piece of what moves the Indian market is simply money flows and sentiment. And we've had a very sentiment-driven market here in the U.S. since the election. And in the same ways that I think the markets in India get overshot because of exuberant money flows, I get the same sense here, frankly. But I'm surprised how robust the positive sentiment is, and we're seeing such strong USD, and such rapid strengthening of the USD could actually kind of have a whiplash effect on U.S. exports. I think what we're going to continue, though, seeing is investors being more comfortable in the stock market here in the U.S., and if for no other reason, because of index-based investing, India will be a beneficiary of some new money. But I just see a lot of sort of tidal waves in either direction in and out of India over the next 6 weeks till we begin to see earnings.